Right now, there are so many things going on with UNH. In just the last 5 trading days, their stock price is down by over 16%. So in today's video, I'm going to be discussing some recent news around changes that they have made at their upper management level. We're also going to be going over downgrades from analysts and diving into the company's recent earnings announcement. And then finally, I'm going to give my opinion on where this stock is headed over the next couple of years based off their recent earnings. One thing that investors absolutely hate is when a company is inconsistent. And one thing that creates inconsistency is changes at the upper management level. And UNH recently announced that they are appointing a new CFO. The company announced that starting September 2nd, Wayne DeVite will be taking over as the CFO of UnitedHealth. He will be replacing John Rex, who has been the CFO since 2016. This is a very large move for UNH because the CFO is second in command behind the CEO, and they are removing someone from this position who has been at the company for nearly a decade. If we go back to 2016 and look at their stock price compared to before their most recent drop, their stock is up by well over 300% since this CFO came into position. And another reason this move is very concerning for investors is because it brings into question the validity of the DOJ's case. If UNH is going through and they are getting rid of all their top executives, there are a lot of questions around whether those executives were doing or even knowingly doing something incorrect at the company that spurred on this case from the DOJ. And if all of this change wasn't bad enough, Baird analysts came out and downgraded United Healthcare stock to underperform. They also lowered their price target from $312 per share all the way down to $198 per share. The main reason that we are seeing analysts lower their price targets and downgrade the stock is because after UNH pulled their guidance earlier this year, there was a lot of expectations that the company would actually not provide guidance for the full year. However, in this second quarter earnings announcement on July 29th, they actually provided full year guidance for 2025. And for their top line numbers, they are now expecting that revenue will come in between $445 and $448 billion. But where the real surprise came in is what they are expecting for EPS numbers. For the full year of 2025, they're expecting earnings of only $16 per share. To put that number in perspective, just 4 months ago in April of this year, the company expected to put up around $26 of EPS for 2025. That means in just a few months, they have dropped their EPS target by almost $10 per share. We will come back and go a little bit more in depth in these EPS numbers here a little bit later in the video. But if you do want to be an optimist when it comes to their earnings, they did say at least. So the company is at least expecting $16 per share. That means they put a bottom on what they are expecting for their earnings, and that is 16. Hopefully they will come in above that. If they come in even lower than that, that would obviously be concerning for investors. And another good comment that we have seen from the company, actually a couple of different times, is that they're expecting to return to earnings growth in 2026. And the reason that I personally think that this will be the case is because despite their bottom line struggles, UnitedHealth Group's top line continues to grow. In the second quarter, they grew their revenue by $12.8 billion year over year to $111.6 billion. That is almost 13% growth year over year for their top line. And the reason this top line growth is so important for the company is because of something called their medical care ratio, or medical loss ratio in some instances. The medical care ratio is basically how much of their premiums are the companies paying out in the health insurance business to cover medical costs. And for the quarter, UnitedHealth Group paid out 98.4% of their premiums in healthcare costs. This is the highest number that they have ever paid out for a medical care ratio. If we look at previous years, in 2020, 2024, for the full year, they had a medical care ratio of 85.5%, and in 2023, that number was 83.2%. This is a lot more normal for companies in the insurance space. And there's actually a reason that most of these insurance companies have medical loss ratios or medical care ratios between 80 and 85%. And that is because under the Affordable Health Care Act, they are actually restricted to pay out a minimum of 80% of their premiums for individual and small group plans and 85% of their premiums for large group plans. If they don't achieve these ratios, then they have to offer those rebates back to customers. So ideally, UnitedHealth Group would see this 89.4% medical care ratio drop back down to around 85-84%. That would be a great number that would really help their net margins and get their earnings back on track. But they are also seeing an increase in the usage of healthcare that is affecting the company in a major way. And they are also seeing some Medicare funding reductions that are reducing their earnings as well. So this new guidance from UnitedHealth Group around their EPS expectations for 2025 is obviously having a huge effect on the stock price, driving it down significantly, but it also affects their valuation. For forward P ratio right now, the stock is trading at a 14.45. Just a couple of weeks ago, before we saw this massive move down in EPS expectations, the stock was trading closer to a 12 forward PE. And these changes are already reflected on Yahoo Finance. The average EPS estimate is now sitting at $16.20. There's a low estimate of $16 that's in line with the company's bottom floor, and we have a high EPS estimate of $16.82. All of these numbers are well below what the company put up a year ago of $27.66. In my opinion, as I look at these EPS expectations and I see where the stock is trading at and these price targets that analysts are putting out, I think that a lot of these investors and analysts are focused too much on the here and now and not what could happen in 2026. For instance, if we look at the bottom EPS estimate, that is $16 per share, and we assume a low PE ratio of 12 in terms of a forward PE, that would result in a stock price of $192 per share. That is around the price target that we mentioned earlier from Baird. And here's the thing, UnitedHealth Group said that they would put up at least $16 per share. If we look at the first 2 quarters of this year, they put up $7.20 of EPS and then $4.08 of EPS in the most recent quarter. That means that over the next 2 quarters, they need to only put up $4.72 of EPS to reach $16 per share. That means they need to average $2.36 of EPS over 2 quarters. Those are extremely low numbers. I think that UnitedHealthcare Group should be able to come through and beat those numbers relatively easily. In my opinion, in 2025, UnitedHealth Group should put up EPS between $18 and $19 per share. That would only require the company to average around $3.75 of EPS over the next 2 quarters. However, for 2026, analysts right now have a low EPS estimate of $16.48, an average estimate of $19.99, and then the outperform estimate or the high estimate is all the way up at $30.43. I think that this number is just a number that hasn't been adjusted after they announced their earnings. If you look at just these first 2 EPS estimates, you get price targets anywhere between $198 per share and $400 per share. That is obviously a wide range, but it depends a lot on valuation because that's anywhere between a 12 and a 20 forward PE ratio. Here's the thing. I think that analysts have it all wrong on this company. Right now for 2025, I think that their estimates are way too low. The new CEO is definitely incentivized to come in and provide low estimates so that he can outperform on numbers over the next year or so. So I think that even over the next couple of quarters, we will see a lot stronger numbers. And I honestly think that UNH again is going to put up somewhere between $18 and $19 of EPS in 2025. And then in 2026, I could see the company easily putting up $23, maybe even $23.50 of EPS. And I think at that point, their PE ratio should go up to somewhere between 15 and 20, which would put their stock price between $350 per share and $470 per share. And that would mean that from the current stock price, UNH is almost a double up. And that's why I hold it in my portfolio. This is the U2 portfolio, and it's currently sitting at a value of $72,000. We are up almost 25% year to date. However, we are down in just the last few days from a high of around $76,000. And a lot of this has to do with the recent pullback that we have seen across the broader market, but also the fact that we have plowed a lot of money into the healthcare industry. UNH is one of our top 5 positions, and it is down almost 20%. And it is the company that I am buying the most of right now. The other stock that I am buying right now is Oscar Health. That makes up only around $3,000 in the portfolio, but we are down almost 3% on this position. Other than those two positions, we also hold Google, Supermicrocomputer, AMD, Microsoft, SoFi, Adobe, PayPal, Abercrombie and Fitch, Alibaba, Estee Lauder, United States Lime Mineral, Zeta, and Hawkins. Right now, I'm not too worried when it comes to UnitedHealth Group. I honestly wouldn't mind seeing this stock fall even further. It's one of those companies that the further it falls, the more and more interesting it gets to me. I don't see the healthcare industry going anywhere anytime soon. And overall, a lot of the CEOs across the industry are talking very positively about 2026 and being able to turn around some of these short-term things in the business and really start growing their earnings again. So overall, I am bullish on healthcare, especially over the next few years. But like I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. Let me know in the comment section down below, how do you feel about UNH? Where do you think the stock is going over the next year? What are your price targets for this company, as well as I'd be interested if you own Oscar, and where do you think that stock is headed in the future? But thank you so much for watching. Again, go down below, let me know your thoughts in the comment section, and while you're down there, drop a like on the video and subscribe for more videos like this one. And as always, have a wonderful rest of your day.